It's been about 3 weeks since my last video, and a lot has happened since then. I mean, Bitcoin managed to get almost all the way up to a very surprising, at least surprising for this early on in the 4-year journey, up to almost 14,000. I think once it hit that 12, 13, then up to towards 14,000, we really started to have for the first time, kind of a bit of FOMO across the board. I think for the first time also we had some retail, and by retail I mean just everyday folks, right? Many of you as well, kind of get concerned or jump right in thinking that they had missed the opportunity and really threw in the towel and started buying Bitcoin here in a little more size and a little more leverage. And whenever that happens, of course, we know that the move, or any sort of move, whether it's a short-term, intermediate term, or even long-term move, is probably more towards the tail end of the move. And I think what has happened here is that finally this move, this beautiful move that started back in February, is probably now over. This intermediate term trend, this 4-month rally, has gone further than I believe almost anybody expected. I was not surprised by the move, but it did certainly go further than I expected. And why wouldn't that be the case? It was up by over 300% off the lows. But also another reason why I continuously on this YouTube channel said, do not lose your position, do not sell into that early on, because when Bitcoin gets going like this, there's just no telling how far it would go. Now, we have kind of an ugly decline here. Look at this. This is, some of you are scared. I can see it by the messages and the questions and the emails and the messages. We are down a pretty significant 34.6% off the top, and many of you are considering selling. And, that's unfortunate. I think many of you, though, are not going to sell. Many of you have now learned the lesson of losing position in a bull market, in not trying to time the market from a hodl standpoint. Traders are a different story, right? I mean, I was short this week and last week at certain points. I've been long at certain points. Trading is different from hodling. Here again, you have to ask yourself, what is it that you want to do, how you want to trade or invest this market, and stick to it. If you need to separate your accounts to look at this from different perspectives, and do so, right? I have a trading account for that reason, and I have a Trezor that I don't touch and don't look at for that reason as well. Each have different objectives, and each, when I consider each of those investments separately, I look at those from a different time frame. When I'm looking at my 4-year cycle portfolio, the model portfolio on the website, I'm looking at weekly and monthly charts only. When I'm trading and I'm trading futures, I'm looking at a 4-hour chart and a daily chart, for example. Totally different objectives. This video is about the hodl and the long term. And I have a daily chart up here. So I'm just trying to point out the fact that 34% decline, yeah, it's significant, but consider this. My last video was 3 weeks ago on June the 21st. That's when it was published. So I'm going to zoom out a little bit here. Let's go find June 21st. Well, okay, June 21st. Here it is right here. Price was at the open at 9,530. So we're down 34%, and Bitcoin is above the price of my last video. So do you get the irony there? All right, so people are scared and panicking about selling here on a 34% decline, but all that's happened is that Bitcoin has retraced to a point where it was only 3 weeks ago. So the catch or the key here is that you can't time these swings successfully. And that's the reason why we don't, in a bull market, want to lose our position, especially on a decline. If you feel at any given time that you have too much leverage on, or you have too much Bitcoin, then choose a time when Bitcoin is outside of the daily Bollinger Band. See how on a run, here's another one here, price stays outside of the Bollinger Bands. That is an overbought situation, and after around about 6 to 10 bars, it's likely or more likely that we're going to have a short-term or intermediate-term top sell on one of those. Okay, you're most likely you're going to get a good price at least. It's not going to be the top, and of course it's going to continue higher in the bull market. But if you're looking at getting out, that's the only time, in my opinion, it's acceptable, when you've got just too much leverage for whatever reason. Okay, you want to get some off the table. But in the bull market, what we look to do is we look to buy dips. Okay, we don't panic on dips. In the past, I think many of you have fallen victim to the emotional aspect of money and what it means to you from a paper portfolio perspective, and you're looking at your portfolio balance on a daily or intraday basis, and when you see a 30% decline, it's impactful, right? And you panic and you get scared and you think, wow, I had 20,000 worth of Bitcoin the other day, and now I have 14,000, for example. But you do forget the fact that you had 14,000 3 weeks ago as well. We kind of fool ourselves as humans like that. We get greedy and we look at the most nominal, the highest nominal profit, paper profit that we had at one point, and we start to expect more and more and more, even though we're up 300% off the bottom. Many of you following me here got in around the 3,600 or 700 level, or the 4,500, or even the 6,000 level. You're still up 50, 70, 100, even more than 150%. But yet your mind is focusing on a 30% decline, as opposed to the fact that it did 60% rallies numerous times throughout this whole process. So again, what's important is that in the bull market, we look at declines like this as opportunity. Now, personally, I'm not looking at this as an opportunity, because I already have a full position I'm comfortable with, that I'm willing to risk for the long term, and this to me doesn't faze me. But if I was somebody sidelined who, for whatever reason, couldn't get their position, couldn't turn themselves around, or couldn't get themselves to buy the rally because they felt it got too out of hand, not many opportunities like this will exist. Now, can Bitcoin fall further? Of course, absolutely. We're not perfect timers of the market. If you were perfect timers of the market, then you would be in at your position at exactly 3,200 or so. But you're not, right? I mean, hopefully you're in the 37 or 44 or 55 level. But many of you are not. Many of you are still looking to get in. So stop thinking that you can time this market. Put your emotions aside and say to yourself, well, hey, 34% decline in a bull trend is not a bad opportunity, and be content with that. I've used those words many times over the last 4 months. Be content with your position, with your entry, and keep in mind the fact that we're looking at a very long-term investment, and we're looking at multiple fold increase in value over that time, and stop playing around with 10%, 15%, when we're looking at 300 to 3,000% increase over the course of this 4-year cycle. So that's being said, again, I think if you've been waiting, I wouldn't wait too much longer if I was you. Again, be content with the price. But also, we all need to be mindful of the fact that in investing, markets do move to extremes, and we've had an extreme move to the upside. There's no disputing that. Very few people can accurately predict any type of move like this. This thing is a very steep move over 20 odd weeks, 4 or 5 months, and it's bound to end at some point. Now, we just don't know when, but we need to also, from the sentiment, or from the sort of the mind level setting standpoint, we need to be mindful that even though we've had a 33% decline, we could be looking at a chopping period to come, or we could be even looking at further downside action. Now, I strongly, and I mean strongly, feel that this level here, around about the 6,500 level, is an absolute worst case floor for the market to stay above. This area where it started dropping back in November, I don't think it's revisited personally. Also, in a bull trend or a new 4-year cycle, to see a decline of the magnitude of 53, 55% is, I wouldn't say unheard of, but if it was to do that, I think it would do that on a very, very big capitulation on an intraday or maybe over a couple days, and then bounce sharply higher. So I think I'm just level setting for you right here. I'm looking at worst case scenarios. These aren't scenarios where you wait to get your position and say, hey, you know, why would I buy now when I can get it at 65 or 68? I'm just level setting here because I don't know, right? I mean, when you're looking for the long term, you have to be content with the market in the short term and its gyrations and its ebb and flow. We don't know where it's going to go. Like we didn't know on the way up. You know, I thought, and you look at my previous videos, right? I did talk about a couple of times the possibility that Bitcoin could just go straight up, right? But that wasn't my primary expectation. My expectation was get your position here, and I think it gets caught at some resistance around the 6400 area, and I thought it would chop around this area in the summer, and not until maybe August start to begin to break out of this 6500 area and begin its way up over the next 6 months from there towards the $20,000 area. It did this much sooner than I expected. So what I'm outlining right now on the flip side of this is that it may do something that I'm not expecting. We need to be prepared for that. And the reason for that is if we are not prepared for a sharp decline at this point, we are susceptible to dumping all of our position on a massive decline based on the fear that it's all over, or that there's some Elliott wave type analysis out there that's saying Bitcoin's going to go back below 3,000 or something silly like that, or that the U.S. government's going to basically ban Bitcoin and it's all over. Any one of those narratives. Now look, we're in this for the long haul. There are many threats, there are many narratives out there that can be bearish, and that will come along, and that will drive price down low on the short term. And we need to be prepared for all of those. We can't take only the good. We can't take only the rallies and then choose to, you know, turn a blind eye to the possibility of declines. They will come, and when they come, the mindset needs to be that this is just part of the process. This is part of investing. This is part of investing in a very volatile and essentially new technology and asset class, and there will be massive swings like there was an 85% decline in a bear market. Even in a bull market, you can get 40%, even 45% declines from the top, right, at any given point, and we need to be prepared for that. And what we need to be saying to ourselves is that that's fine, okay, I can live with that. And maybe you're saying to yourself, well, I don't have a big enough position, right? I don't have that sort of 10% of net worth or 15%, whatever your number is. Maybe this is now the time I buy. So you're buying strategically. You're buying on the dips. All your dollar cost averaging, maybe not on a schedule, but on every 20% decline, for example, or every 30% decline. You're saying to yourself, that's my trigger to add some more Bitcoin to my account. Something like that. So you're being smart about your purchases. You're buying on weakness in a bull market or in a new 4-year cycle, and you're not panicking, because when you panic and sell a massive decline, I can tell you what's going to happen. You're too passionate about Bitcoin and crypto. You love this space. That's why you're in it. But when you dump your coin, or you dump a big portion of it out of fear, and then it reverses higher and everyone gets excited again, what do? You start to kick yourself. You've done this before, I know. You start to kick yourself and you start to say, damn it, it's actually going higher like we thought it was. How can I be so foolish to drop my position? And then you're going to buy back later at 30% higher, 40%. In effect, what you've done is you've reduced your actual Bitcoin size significantly because you thought you were protecting yourself, but all you were doing was panicking and running and fearing the market. So forget where it's going. Stop asking me where I think the bottom is. I don't know exactly where the bottom is, right? I can trade this market on the short term and be pretty successful at doing that. But from a longer term perspective, right, I respect trends. And I kept saying, respect this trend, respect this trend. We had a nice accumulations phase here in March that broke higher. This was, for me, the absolute confirming candle. I said that in a video in April. that we should all get in if you have not already. This flag here led to another move, and then this sideways consolidation, another move. Now it could be triggering a step down process. Again, I don't know. I respect the trend. The trend in general has been higher, so I respected it going up. Now on the downside, I'm going to respect the fact that Bitcoin could be going through a period of consolidation. I'm going to be patient about that. Ideally, what I want to see, or what I think we could see now, I'm going to see if I can try and draw this in a little bit on this chart for you. So we've got this line up here, all-time highs. I had talked about consolidation down in this area here before moving higher. Maybe we get that chop and that consolidation now in this area here. So the boundaries could be something like, and again, this is just me almost thinking out loud. In the end, it's pretty much irrelevant to the long-term cause, but I think it helps level set again and set our expectations for what could happen. But let's just say a 40% decline from the recent high. Okay, so we could be looking now over the next, let's call it 2 60-day cycles. So we have a new 60-day cycle that's, I think, in place right now. We could be looking at another move higher. And then we find a low at that 40% level. Then we rally up again. Okay. Then we come back down and kind of retest it. Maybe we form kind of an inverted head and shoulders with shoulder, and the head in here. And then, you know, it's not until maybe November now. We may not see any action for 3 or 4 months. Be prepared for that. I think this bull market needs to find, it needs to build more of a foundation now that we've had this recognition move here. I believe, and again, a pure opinion on my behalf, I believe here, because retail was not so involved here, I believe we had a supply constraint on supply and a massive demand event from more of your institutional players driving up price. But I think now we've reached a price where people want to cool off and people don't want to drive this, investors, institutions don't want to drive this any higher at the moment. I think we need a period of profit-taking consolidation and then some more accumulation where it then drives the price higher again. Then we start to see a move and a discovery up towards the 20,000 area where I think we get some more resistance up at that level. Again, just lines in the chart, right? You're interested and you're concerned with the long term, and my goal here, or at least my objective in this, is not to talk price up. I think Bitcoin's going to a certain place. I've described why. But my job here is to make sure that you don't puke your position and lose your position, and also to buy smartly and not to pay or overpay when you don't need to. If you're buying continuously on the pump, or not so much the pump, but if you're buying after, say, 4 green candles in a row, then you're just chasing the market and you're allowing all the news and the social media feed to get to you, and then you're over leveraging, you're buying too much. You're panicking then on a couple of red candles. You're doing it backwards. You're doing it wrong, right? Get smart about this. Become a smart investor and buy the dips when the opportunities come, and do not panic. All right, I'm going to leave you with just the monthly chart. I think it's important always to go back to the main objective. I think as a hodler, the monthly chart should be the chart of choice. It removes all the noise, and it just aligns perfectly with your long-term goal. And when you look at a monthly chart going back 8 years or 9 years here, I think this cleanly and clearly sets the trajectory and the trend, and we are riding this type of trend, right? So in general, we avoided much of this bear market. We're in now in this bottom here. Look at the separation here that we have between the 10-month, and 10 months is a long time, but the 10-month moving average and price, right? When you see such separation, that means you're now at the depths of a bear market. You saw it right here, and you saw it right here. Those are buying opportunities. Essentially, the reason why I said back in December, originally in that video, that even though I don't know if the price is the absolute lowest, I think this is the time to buy. And now we're above a rising 10-month moving average. And you look at the moving average, once it begins its swing, it doesn't turn back, right? Until the peak. And I don't mean I don't mean short term or intermediate term, I mean the long term bull market peak. That's when you see a downturn or a top in that trend line. Now, we do have some separation between price and the 10-week moving average on the high side. I think that suggests that we do need some of that consolidation that I talked about. I think we need to bring price closer back to that 10-month moving average. And I think that's what we're going to see now over the next couple of 60-day cycles. So meaning the next 3 or 4 months, we could be looking at a mostly sideways move like this, and then we see a catch up of the 10-month moving average. I don't even think we touch the 10-week moving average price, but we get close to it, and then come so December we can, and then maybe even February we'll make that move up towards the $20,000 all-time high. Maybe again we find some stiff resistance at that level, and then 2020 we begin the breakout and we begin to go. That's how I see it. I don't think much of that outlook has changed. The only thing that's changed from 4 months ago is how quickly we got above that 10-month moving average. Overall, still a very bullish chart. I think I don't think anything from a long-term perspective has changed. The narrative has not changed. The evidence has not changed, and therefore my investment has not changed, and I see no reason why I should change. This has been a 4-year cycle update. You can leave any comments. You can please like the video if you indeed you do like it, and share it anywhere you like on social media. Appreciate your time. Appreciate you listening to the video, and I wish you all the best.